Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 358 on January 17th, 2025. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Plug Power, DraftKings, and Riot Platforms, and we discuss three new trades on Cleanspark Inc., Barrick Gold Corporation, and the United States Steel Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. The market finished the week stronger by several percentage points. The Dow Jones Industrial Average grew 1,549 points, closing at 43,487 points on Friday. The S&P 500 index picked up 169 points, ending the week at 5,996 points. And now it's time for the topic of the week. The topic of the week is process versus outcome. And this is a topic I've spoken on before, and I definitely wanted to start the year off thinking about this again and kind of reiterating it. Now, there are a number of books that I've thoroughly enjoyed that discuss the challenge of processes and outcomes. Specifically, when you are in a role that manages risk, you don't ever truly control outcomes. My performance is based on the process. I do not control outcomes, which is hard for me to acknowledge every now and then, so it's good for me to acknowledge. In order to improve my trading, I need to improve either the process itself or my ability to execute on the process. It's easy to focus on outcomes, right? That's the number at the end of the day. As a trader, all that matters at the end of most days is your P&L, your profit and loss. However, your profit is simply the effect. If you want to change or improve, you have to start with the cause. The cause is your process and your ability to execute that process according to the plan. As I make plans for having a better 2025, a better new year, I'm focused on my process. In fact, if I continue to improve my process, the profit will take care of itself. So don't focus on outcomes. You don't control the outcomes. You only can control the process. This applies to every aspect of life, especially trading. If you're performing, if you're dealing with any type of uncertainty, chances are it's the process that will change the outcomes. Don't focus on the outcome, focus on the process. So let's get in the trading review from last week. We're going to start off with the covered call on Plug Power Inc., symbol P as in Papa, L as in Lima, U as in Uniform, G as in Golf. At the time, the stock was trading for $2.87 per share. I looked at buying stock and selling the February 3 call at 39 cents, hoping for a return of 18.12% in 6 weeks. Well, shares of Plug Power lost 43 cents, ending the week at $2.44 per share. The call option that we sold lost 27 cents, leaving us with a net loss of 16 cents if we were to close this trade out immediately. Now, closing the trade out immediately is always an option, but it's rarely the best option. We are 4 cents below our break-even price, which definitely justifies making an adjustment to this trade. However, I'm more prone to wait another week before doing so. Why, you ask? Making an adjustment will change the economics of the trade, and this trade still has 5 weeks left before expiration. That's a lot of time for this stock to possibly head higher and allow us to finish with our original profit target intact. If I were to make an adjustment, the first goal would be to roll the strike of the call option lower. Now, even if the stock sits still for another couple weeks, the value of the call option we sold will continue to depreciate simply due to the loss of time value. That means we'll capture more profit and possibly increase the value of rolling the strike lower in our favor. In summary, the stock moved against me, but I have time on my side at this point. I'm going to wait before making an adjustment in order to give the stock a chance to either head back higher or for the call option that I sold to lose more of its value before I roll the strike lower. Either way, I'll be keeping track over the next 5 weeks. Next up, we have the credit spread on DraftKings, symbol D as in Delta, K as in Kilo, N as in November, G as in Golf. At the time, the stock was trading for $39.49 per share. I looked at selling the February 39.38 put spread at 38 cents. That could give us a maximum possible loss of 62 cents per spread. Well, shares of DraftKings lost 20 cents, ending the week at $30.29 per share. The out-of-the-money put spread that we sold is still out of the money. The stock is still 67 cents above the break-even price, which means the stock price is still valued above our profit range. That's a good thing. So no adjustments are needed on this trade at this point. Of course, with 5 weeks left until expiration, you'll definitely need to keep track of the stock price on this trade as well in case you need to make any adjustments in the future. And our final trade from last week was a debit spread on Riot Platforms, symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. At the time, the stock was trading for $12 per share. I looked at buying the February 11-12 call spread for 51 cents. That could give us a maximum gain of 49 cents, or that's a 96.08% return in 6 weeks. That's a phenomenal return. Well, shares of Riot Platforms picked up $1.38, ending the week at $13.38 per share. The in-the-money call spread that we bought is now even more in the money. The stock price is currently $1.87 above our break-even point, so no adjustments are needed on this trade either. I always watch these debit spreads closely. If the stock pulls back, I'll need to have a plan for how to make an adjustment or even to just consider closing the trade early to lock in a profit. This trade is working out so far, so I'm pretty happy with it. That return, the 96% return, is unusually high, but I love finding trades like that just so I can try and lock it in. That's the beauty of options. So that's it for the trading review for last week's trades. Today, January 17th, was options expiration for all monthly option positions for January. All new trades on today's show will use the February 21st expiration date for monthly options in February. And just so you know, when the market opens on Tuesday, the new strikes, the 50-cent strikes, will be posted. So you might find better values than those listed here on the show. And as a reminder, the U.S. stock market will be closed on Monday, January 20th for Martin Luther King Day. Next week will be a shortened trading week. So all of those announcements done. Let's go ahead and get into the new trades. We're going to start off with a covered call on Cleanspark Inc., symbol C as in Charlie, L as in Lima, S as in Sierra, K as in Kilo. The stock ended the week at $11.87 per share. I'm looking at buying stock and selling the February 12 call at $1.45, hoping for a return of 13.31% in 5 weeks. Now you enter this trade by buying stock for $11.87 per share and selling the February 12 call at $1.45. This trade makes the most money if stock prices finish above $12 per share. The break-even price on this trade is $10.42 per share. In real terms, the stock purchase will require $1,187, and you would collect $145 for selling the option. Next up, we have a credit spread on Barrick Gold Corporation, symbol G as in Golf, O as in Oscar, L as in Lima, D as in Delta. The stock ended the week at $16.01 per share. I'm looking at selling the February 16-15 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Now you enter this trade by selling the February 16 put at 58 cents and concurrently buying the February 15 put for 25 cents. This is a credit spread because we're selling the spread and this trade makes the most money if stock prices expire above $16 per share. The break-even price on this trade is $15.67 per share. In real terms, you'll collect $33 per spread that you sell and have $67 at risk. And our final trade on the week is a debit spread on United States Steel Corporation, symbol X as in X-ray. The stock ended the week at $36.04 per share. I'm looking at buying the February 35-36 call spread for 62 cents. That could give us a maximum gain of 38 cents or a 61.29% return in 5 weeks. Now you enter this trade by buying the February 35 call for $2.60 and concurrently selling the February 36 call at $1.98. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $36 per share. The break-even price on this trade is $35.62. In real terms, you'll pay $62 to enter the spread, and your maximum gain is $38 per spread. So that's it for this week's show. Thank you guys so much for listening. I hope you have a fantastic 3-day weekend if you are in the U.S., and if you're not, have a wonderful weekend. Stay warm. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.